What is universal life insurance? In a nutshell, universal life insurance is a permanent policy similar to whole life. It's meant to last your entire life, and the premiums are meant to stay the same, and coverage stays the same. However, it's not that simple. You're able to change your premiums. You can change it up or down. You can pay less for the policy or pay more for the policy. But if you don't pay enough, that policy will not last very long. You'll lose coverage in a few years. What you're essentially doing is every time you pay a premium, it goes into this bucket. And every month, the universal life policy takes the money out of this bucket. If it goes to take money out of the bucket and the bucket's empty, that coverage ends. It's over for that policy. So you have to make sure that bucket is full. Money in there earns also interest on the investments it's in. And so it requires constant monitoring. Every year, things can change.
The disadvantages of universal life insurance are: one, premiums can be expensive, making it hard for policyholders to keep up the payments to keep their policy active. Your insurer may also cap your cash value returns or how much you can invest based on tax laws. Ask about things like participation rate or contribution limits before signing up. There's no hands-off versions of these policies. You'll need to monitor your policy closely to make sure you're paying the right premiums and your cash value doesn't get depleted. If this happens, you could lose the policy. Make sure you also carefully look at the interest rates you could earn. If you're interested in investing for your financial future, you may be better off with a traditional investment account like a TFSA or an RRSP. Cash value is one of those features most people are familiar with when it comes to universal life insurance, but it takes time to build up, likely 10 years or more. You need to get a clear picture of how long it will take before you will ever be able to withdraw or borrow against it in case of an emergency. These policies are often sold as flexible coverage you can adjust as your needs change over time. This may sound like a good thing, but be aware that raising your coverage may require a health exam, which could trigger higher premiums. Is universal life insurance a good investment opportunity? Universal life insurance is not a good investment strategy for most people. In most cases, you're better off putting your money specifically into an RRSP or TFSA. If you're a high income earner who has maxed out other investment options like your TFSA and your RRSP, it would be a good option to consider. But with limited returns, it's typically not a great investment. Also, in the worst case, the returns are overestimated when the policies are sold, leaving people with the impression that they have more security than they actually do. As time goes on, premiums can go up, the policy could be underfunded, and then suddenly you can't afford to keep the policy active anymore. Who is universal life insurance for? So there's two groups of people that make a lot of sense for universal life insurance. The first is younger people making high income who don't need the money for decades and can take on more risk. In this case, if they know what they're doing with their investments, it's a great option for them. The other is those who are just in a high income tax bracket and have maximized their TFSA and RSP, and they want to pass down an inheritance to their family tax-free. They'll be able to choose their investment options that aligns with their strategy of passing on their estate as a legacy fund to their next generation. And this is the perfect vehicle for an individual or even a partner to ensure that that happens in the most tax efficient way for their family.